What's going on? What's going on, guys? It's been quite a while since I made a video, and I feel like this time is very necessary for me to come out with a video because I know a lot of you guys have been messaging me, asking me where I've been, and I want to update you all with my current trading plan, some of the changes that have came out since then, and the reason why I felt like it was necessary to make a change. And so, to kick things off, I want to talk about the New Year's bump. Now, this is something that I personally have dubbed as the New Year's bump, and it's because it's very, very important to me personally. It was the cause for a lot of change that has come to FCI and the Signals program in the future and as of right now. And I feel like it's very, very important just to give you guys a little background as to what exactly was going on. So, the reason I call it New Year's bump is around New Year's, maybe a little bit after. Donald Trump, as you all know, had stepped down from office. Joe Biden stepped in. And Donald Trump leaving office was a big, big deal, more so on my behalf of my trading strategy, because Donald Trump's, I want to say, actions were very, very easily predictable, and that played into my trading strategy. So, as you all know, if you do trade, Donald Trump, when he has a news press conference or a tweet or he comes out with a video, there is a huge cause that brings the Forex market either to a peak from the current range or a crash from the current range. And when he was in office over those 4 years, the US market stayed inside of a range, whether it be GBP USD, EUR USD, USD CHF. There was a identifiable range that the market would stay inside. And that made it very, very easy to catch the reversals, whether you're from the top or the bottom. And identifying that trading range was very, very simple. Now, ever since Joe Biden has come into office, the market has come into a point where it'll push in one direction, but it'll actually wipe the current zone and then form a new one, whether it be to the highs or the lows. And so it's very, very different from those previous 4 years. I've been trading for almost 4 years now, so that time when Donald Trump was in office is very, very unorthodox, is what I want to say. Now, this isn't an excuse to say the least. It's just to give you guys an example as to what exactly trading was like before. Now, there's always going to be changes, and I'm one who welcomes change because change equals growth. And so I used that opportunity that came with Joe Biden stepping into office to really take a step back, look at the bigger picture, and make the decision whether or not I want to change my trading plan. Now, my trading plan now is not so much different from when it was before, but there are a few more confluences and factors I'm going to count into my trading before I actually take my position. Now, that comes from the top-down analysis, higher time frames breaking down below, and as I get into those closer time frames, I'm going to actually identify potential positions leading up to my actual entries. Now, what exactly does that mean? I'm going to open up a chart here. Let's see the 4 hour. I'm going to identify the current range. So we're previously heavily bullish. We're approaching a nice key level where the market kind of came up and played into a little bit of a resistance zone. So there is heavy demand inside this zone. And as the market approaches it, you can see we're right in the middle of the zone. Market reacted. We're coming down again. We have this huge 4 hour bearish candle. Nice huge wick, completely engulfing the body. Market is sitting inside the zone. So what can I actually expect moving forward? I would expect this market to be bullish. Now, I would have a bullish bias going into this trade, and as I get into the closer and closer time frames, I'm going to start looking for buys. Now, that means I'm completely invalidating the sells. Why do I do that? Because I'm looking at the overall market structure, and I'm looking for opportunities that coincide with that overall trend. Now, to some, that might sound like a very, 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 very basic approach to the market, but in comparison to my previous strategy, I would identify both areas and look for the highest probability one. So I'm approaching the market from a completely different manner, looking for bias going into the actual market trends and playing from there. So that's a little bit of a switch going into the top-down analysis. Now, when it comes into actually taking trades, for those of you who took the signals, I sent out a lot of limit orders. Now, that was because I didn't know when those markets were going to take effect time-wise. Now, not to sound lazy or anything, but I was trading several different markets at a time. So I was trading NZD, EUR, GBP, JPY, JPY, or GBP and JPY markets. So I wasn't sticking to one little area. Going now into trading, I've taken only 3 currency groups I want to stick by. and that'll be EUR, that'll be GBP, and that'll be JPY. I'm gonna stick inside those major three. The US dollar, I'll trade from time to time. It's not gonna be a big focus right now because their economical standpoint is very, very shaky right now. For those of you who haven't been keeping up, Biden has closed several thousand jobs, and the bills he is passing is to just fund the Federal Reserve and yada yada yada. It's just a complete mess right now, and I'd rather stay away from a very shaky market and stick with the ones that are more steady and more level-headed. So that's what I'm going to be doing going forward. The next topic I want to discuss is the May Signals reboot. Now, this is just going to be a new chapter for the Signals program. We're not coming out with new programs, so don't worry about that. Those of you who are in the remastered Signals program, you guys are set, whether you be on the 1 year, the yearly program, the lifetime program, or the monthlies. You guys are completely fine. Don't worry about you guys. But the May Signals reboot is going to be a new approach to the Signals program. So there's going to be a couple things that are coming out. For starters, I am sending less trades. Now, by less trades, I mean less quantity, higher quality. I was getting to a point where I was sending almost 12 signals a week, which is, again, that was fine at the time. But now I want to be a little bit more percentage-wise when it comes to trading. I want to approach the markets with one goal and one goal only, and that's to make money and then get out. By that, I mean I'm going to stick inside the markets for less time. By that, it means I'm taking less trades. So the trade strategies I'm taking are going to have a higher reward and lower risk. I want to approach the markets with a risk management focused trading plan. And I want to enforce that on all of you guys, not only those of you who take the signals, but I want those of you who are becoming full-time traders on your own to really emphasize risk management in your trading plan. And we did enforce this a lot in the start, Carlos and I, but risk management is something that I know a lot of you struggle with because, emotions play into trading. Your mental can get a little bit messed up when you see a trade that has a very high probability of paying out, and that can cause a lot of you guys to get greedy because you'll see a trade, to cash out $150, and you think to yourself, man, if I slapped on a 1.0, that could have been $1,000, and you're right. But again, you guys need to keep in mind that once you break your trading plan, even if it does pay out, you have that in your mind that you broke it once and it paid off and you can break it again. And that's something that I don't want you guys falling into the habit of, because it's something that at the very start I was doing too. I got lucky a couple times and it got to my head and I ended up losing more than I won. And so I feel that's just something now with the new year and the new quarter, especially, it's quarter 2 of the year, we need to actually start making immediate changes and major changes to our trading plans. That's just something I personally resonate with, and I want you guys to really feel my passion going into that section of trading, and I want it to rub off on you guys, if that makes sense. Now, each trade is going to come with a video breakdown. You guys are going to see a 2 to 3 minute clip, it could even be 10 minutes at some points, of a trade that I'm going to send out. It's a signal that is almost active. I want you guys to see why I'm taking that trade and why I'm actively watching that position, because I want you guys to, before you take the trade, think about whether you want to or not take that trade. I want you guys to watch my breakdown, go to that market, and break down that pair for yourself. Why? Because I don't want you guys blindly taking my trades. Now, that's not to say I don't trust my strategy, because damn, if I'm sending you a signal, you best believe I believe in that trade. But I want you guys to have your own opinions. I don't want you guys taking a trade that I send out, and then if the trade hit stops for whatever reason, you guys are like upset and you guys are like, oh man, I shouldn't have taken that trade. Well, if you thought about breaking down that market yourself before you took the signal, you would know why I entered that trade. And I want you guys to get familiar with breaking down analysis and really diving into the markets as much as possible. Lastly, I want you guys to understand your mental and my mental going into these trades. So back a few months ago when I was sending out signals, I don't want anyone to feel targeted, because it was a good handful of people that would do this. They would see my signal and they would send me their markups of that particular pair. And they would go, oh man, I don't know, I see this trade going the other way. I don't want you guys doing that shit. I really don't, because it messes with my mental, and that aspect of you guys affecting my mental can rub off into the signals channel. And I don't want you guys doing that, because it's a bad habit. Not to say you guys going against my trades is a bad habit, because I'm all for it. If you believe it's gonna go the other way, take that trade, but do not tell me that you see it going the other way. Now, trading is very, very mental led in terms of 70 to 30. It's 70% mental. We always say this time and time again. But for someone to mess with your ideology going into a trade, it can really fuck shit up. It can really fuck it up. And I want my bias, my personal bias, to be left alone, because my personal bias and my mental strength, my mental fortitude coming into trading has got me where I am today as a full-time trader. And I don't want anybody messing with that. And I'm pretty sure those of you who trade would not want me doing that either. So just out of the respect for myself and for those who are taking the trade signals, don't fuck with my trading strategy. Don't do it. If you're gonna take the trade the other way, if you're gonna trade the opposite of me, by all means, bro, go for it. I am all for it, because at the end of the day, your capital and your growth as a trader is very, very important to myself, and I can speak for Carlos when I say that too. So just stick with that. Lastly, actually, I want to back up for a second and talk about why exactly I'm saying less trades as well. It's because over trading can be a very, very bad habit. You know, say, for example, we're going to go back on risk management. If you have a 5% risk for the day and you lose that 5%, don't trade. Now, over trading would be trading despite that minus 5% risk. If you've already lost 5%, it's very, very important you cut it off for the day. You take a step back and you go over your trading strategy and cover that once again. Now, out of the respect for my other clients that I have, because as for those who don't know, I do run a MAM account, and I have clients I want to respect. And by respect, I mean trade my own strategy and risk management plan and apply that to their account, because that's what they came to me for. They came to me as a trader, asked me to trade their accounts, and respect that. I'm going to stick to my trading plan. I'm going to send less trades at a higher quality, and I'm going to continue to do that in the signals program. I don't want to overtrade, because that can just lead to a whole mess, and it becomes one big fuck up. So out of respect for all of my clients and myself, less trades will be sent out, and I will stick to my 5% risk per day. If I lose 5% that day, I'm cutting it off. Lastly, for all of the trades, I've already started implementing this. Please do not use more than 1 to 2% per trade. If you can use a 0.5%, by all means do that. If you guys don't know how to do that, I sent the link in the signals group, and I'm going to show you guys right here. Lot size calculator on Cashback Forex, trusted website. Very, very helpful. Position size calculator. Grab all the currency pairs you guys want. US dollar currency. If you have CAD, by all means, go up to CAD, click CAD. Stop loss, right there. Count balance, pip size is going to be calculated automatically. I use 1% risk per trade. That means if I take 5 trades and all 5 of them stop me out, fuck, I have 5 trades for the day. And if it's 5% down, that I fucked up. I gotta come back the next day and start trading from there at 1% again. 1% risk does not mean you're making 1% back. You can make 10% of your account back per one trade if you trade correctly. Now I'm gonna enter at 50, and I calculate it. Boom! I use a 0.43 lot size on my trade. It's beautiful, and it'll help you out when it comes to trading. It even shows you how much money you're risking for that trade. Account balance is 100K. 1% of that is $1,000. Very helpful. And I do believe that is going to wrap up this video. I want to thank you guys for if you've made it this far in the video. It's about 14 and a half minutes long right now. It's going to be about 12 minutes when the video is edited. But I hope you guys are up to speed with my trading plan and where I'm currently in my Forex journey. I really, really feel like this was a necessary step to take back for myself and for the longevity of our trading career. For you guys and for First Class, it was necessary for me to just, take a step back, take those 1 to 2 weeks necessary to reevaluate my trading plan and come back with a full head of steam and take the markets by storm. Currently, I'd say I'm about 80% back at full speed when it comes to trading. I'm just, working out a few little adjustments here and there that are very necessary when it comes to actually trading. I actually want to show you guys really quickly how I would approach the markets. I know I showed you guys over. All right, guys, as I was editing that clip, I realized I got completely sidetracked. I started talking about who knows what, and I didn't even show you guys how I approach the markets from the top down. It was kind of weird. I got so sidetracked, but I'm gonna cover that for you here quickly. The way I approach the markets is top down, higher time frames, going down to as little as the 5 minute to watch the candles form and take my position from there. So I'm gonna show you guys right here. We have a nice bullish bias. Market is continuing up in an uptrend. And as you guys know, traditionally speaking, you have a down channel, market sideways channels for a bit to grab more orders and then shoots up. Same thing from the reverse, up channel, sideways channel to accumulate more orders, and then down channel. That's the traditional way the market moves. Now, I would look for the bias from the top down. In this case, we have nice bullish price action. I'm looking for buy orders. Now, I would like to look for the market's pending orders. That means we have an area where the market is in high demand. In this case, we have a high demand for buy orders. That means the market maker, the institutional levels are going to take out the buy pending orders. So retail traders would place their buys inside this wick because we have nice support forming. Actually, let me show you guys here. Nice support forms from this line to the wick. Right about there, that blue wick would be the retail order buys. Have the market come in, they would place their buys right at the level. I don't care that we're in the 12-hour. I'm showing you guys the retail bullshit. Nice traditional 30 pip stop loss, and whoopee, look at that. Market came down on the 1 hour and smacked our stop loss. By retail bullshit, I'm not bashing retail trading. I'm just saying, you know, as time goes on, you learn you learn the ways of retail trading. Market slap the stop losses. That's what I notice as a non-retail trader. Now, that also comes with market gap fills, meaning when you have high pushes, the market is bound to come back and fill those gaps. This is called imbalance. I'll make that blue. So, what does this mean? On the replay monitor, when you had this high wick push, market needed to come down here and fill that unhealthy price action. Unhealthy price action is anything where the market has not filled the gap. Now this here would be a market gap because the market pushed up really heavily, but as time went on, market came down and filled that gap. So that means on this side, the market would fill that gap, traditionally speaking. As you guys can see, over time, it did take a while, but the market did come down and fill that gap. So exactly, with that said, how would I approach the market from this point forward for a buy? Wipe this clean. Identify that the market did come down to fill this previous area where there were pending orders. Now that we've pushed below, I would go on to the 15-minute. I know the market's closed. I'm just showing you guys how it would go traditionally. I would, hypothetically speaking, see support fill from this side, and I would wait for a bullish buy candle. Imagine this is a candle. I'll make it skinny for you guys. I would wait for a bullish buy to form. I would wait for a brief area of accumulation to form, and then I would take my buy order from the middle. Nice tiny stop loss from a previous low, and set my take profit to a reasonable target that is easily achievable. Now this is a long-term position. This would be my overall take profit, but I would look for reasonable take profits somewhere inside this level where the market has accumulated for a little bit. You need to set realistic targets when it comes to trading. I know this is kind of a really makeshift breakdown for you guys, but that's truthfully speaking how I would look for a buy potential order here. Market starts to fill with a nice area of support. Traditionally speaking, bullish price action takes place to break back above that level. More accumulation. Imagine this to be a sideways channel, and then I place my buy order when I see the market start to shift into a bullish movement. My stop loss is set from the current low, whether it be a wick or a bearish candle. Set it just outside, give it a couple pips of room. Take profit set to a reasonable area where the market is easily achieving that zone. In this case, we're going to see a lot of wick fills to make up for this unhealthy price action. That's just how it will go from my newfound trading strategy. Of course, coming to the weeks, I will send you guys breakdowns and I'll give you guys a little bit more insight to how I trade a live market. But I appreciate you guys watching this video to the very end. Those of you who stayed, I love you guys. I'll see you guys in the next video. Take care.